Okay, welcome to QAV Australia, episode 835. TK, how are you?
Very well, thank you, Cam. How are you?
I don't know, but we were just talking off air and my voice was down here. And as soon as I turn the record on, my voice comes up here. And I don't know why it sort of does that. Hello.
Maybe you sit, maybe you sit up straight when you start recording.
Yeah, that's what I should be doing too. My posture.
Hmm.
Tony, it has been the most volatile reporting season on record, according to Richard Shellbach, an equities market strategist at UBS, who said that in terms of share price moves on result day, there were outsized reactions. So we're not the only people that have been noticing how crazy that has been. In your 30 odd years of experience, I'm assuming you think it's sort of unusual. Do you have any theories on why? There are some in this Financial Review article that I got that quote from.
Yeah, well, the article talks about the fact there's much more index investing and passive investing around and less fund managers doing what they call price discovery, so reacting to the new numbers when they come out. That's probably part of it. I don't know if it's the most volatile reporting season I've seen. I've certainly seen reporting seasons where stocks move 20%, which is about what they have this time. But I squarely put it down to the fact that we had radio silence during confession season. I didn't hear much at all come out from people saying, "Hey, we're putting our numbers together now, and it's not looking like we guided," or "This is going to be unusual. Let's get it out there." I think that's the reason. You can't tell me, like, I think the article refers to stocks like CSL, so big stocks, which have moved when their reports came out, but you can't tell me CSL didn't know what was coming a month beforehand. And, I'm picking on them. They might have their reasons, but yeah, I think it's been a complete failure of confession season, a complete failure of the ASX to be effective at holding these companies to continuous disclosure.
Well, I do have to give a sort of golf clap to Lachlan Halloway from Morningstar. He's an equity strategist at Morningstar. In the Financial Review article, he said, "These are once-in-a-generation moves. The animal spirits of the market are fickle, and when the winds change, it can be brutal." I just like that. Like, normally I'm reading the Financial Review sort of yawning, but I love it when somebody can throw in a little bit of poetic terminology. The animal spirits of the market are fickle. It reminds me of that. It reminds me of that Seinfeld episode when George goes out pretending to Marissa Tomei, I think. He was a marine biologist. And the golf ball is stuck in the blowhole. The sea was angry that day, my friends. Like an old man trying to take back soup at the deli. Halloway went on, "Earnings beats and misses are generally met with a similar move in the share price. It's perhaps a little myopic as to justify a 10% fall in intrinsic value. You must assume not only that next year's earnings are now 10% lower, but in effect, so too every year into perpetuity. In many cases, this is untrue, but it's often how Mr. Market works." Well said.
Yeah, and that's another
Lachlan.
point which I didn't make. It is how Mr. Market works. It was a good analysis, but I think I've spoken before about my experiences and when I used to turn up to earnings results announcements many years ago, and you'd see the same harried analysts in suits with their ties slightly undone because they've been running all over town, running upstairs to get to the next meeting, and then they'd flip their laptop open and put in their orders based on the results, trying to, get in there before the stock dropped or get in there before the stock rose. It was 2,000 stocks reporting within 4 weeks. It's a shoot first, ask questions later type approach to analysis, and that's another reason I think that you see volatility, and we'll see in September. Sometimes these stocks start to revert back to their mean quite quickly because people, after they've digested the results properly, will change their opinion.
I often, and I know lots of our members go through this process as well, when we see a share price drop by 10, 15, 20% on the day the report comes out, and we read the report and we go, well, it's it was pretty good, really.
Yeah.
And then we think, did the market overreact? Yes, but it trips one of our sell triggers. And we're often like, well, should we just ignore that and, wait till the market calms the hell down and it comes back again? I mean, should there be a caveat on our sell triggers that should be ignored with, if they trips one within like 48 hours of report coming out? I don't know. Because then sometimes the reports do justify the drop and it becomes a bit
Yeah.
subjective.
Yeah. That's a hard one to answer. I'm not averse to giving it a day's grace, but you run the risk of it dropping further.
Yeah.
Yeah. So that's a hard one to call. Rules are rules, I guess. Uh, uh, but yeah, I take your point. It's reporting season is volatile, and it can be volatile not because the business underneath is volatile. It could just be that there's been an earnings miss. So like you said, I'll look at the report and think, yeah, those numbers are pretty good, but if they're slightly below what the market thought they were going to be, it can be a sell-off.
Yeah.
Which makes little sense to me.
Well, let's move on to some news of the week. Our dummy portfolio, in the last 30 days is up nearly 12% in 30 days.
Mm. Well, we know that earnings season often is the biggest mover for our portfolios.
Let's just sell and go home for the rest of the year. That's versus the SPDR 200, which is up 3.4% in the last 30 days. So it's been a good month for us. By the way, according to Navexa, 11% of our return is capital gain, and for that period, and the other half to 1% is income return. Over the last, what will we do? Year to date, current calendar year? Yeah, sure. Why not? Current calendar. Oh my God, let's go home. Current calendar year, we're up
We are at
20.
home.
We're up. Oh yeah. We're up 23% for the current calendar year versus
Go us.
just under 12% for the index. So we're doing double the index for the year. 17.4% of our return is capital gain. The other 6% is income return.
Mm-hmm.
Last 5 years becomes a little bit more reasonable. We're up 18% per year over 5 years versus 12% for the index. So, yeah, doing all right. It's doing okay, TK.
It's working, and it's well, I don't know how to put this without sounding like Schadenfreude, so I'll say it's validating when I see stocks like CSL and Woolworths dropping by large amounts when their results come out. And I find it validating because there are plenty of stocks which are held in portfolios because they're in the index or because they've had good runs in the past, but they're hard to justify on current valuations, but people keep holding them.
Yeah.
Yeah, and we don't, and I think that's one of the reasons. I mean, as we said way back in probably episode 1 or one of the earliest ones, it's the way to beat the index is to take out the bad stocks.
Yeah.
And CSL and Woolworths aren't bad stocks, but it's
overpriced
they're
stocks.
It's not stocks that we want to hold.
Well, I said that the dummy portfolio is up 12% for the last 30 days versus about 3% for the index. That's the Australian portfolio. But when I flip over to the US portfolio, for the last 30 days, our portfolio is up about 12% versus the index up about 3%. So it's exactly the same. Slightly better. 12.5% we're up versus 3.5% for the index. But it's a mirror, which is crazy. Like,
it is, isn't it? Yeah.
We've seen that a couple of times lately where the US portfolio is just mapping the Australian portfolio. For the year to date, though, not as good. Australian portfolio is up 23%. The US portfolio is down 7.5% versus the index up 10%. But as I keep pointing out, that's because at the end of last year, our US portfolio was up about 85% versus the index up about 30. And then Trump had Liberation Day and our stocks came back quite a lot. So
Right.
they were riding hot and high before Trump decided to fix the American economy by creating chaos everywhere. Actually, it's funny, in our US show today, I'm going to be doing a pulled pork on a really interesting company that's a Brazilian eucalyptus pulp and paper manufacturer, the largest eucalyptus pulp and paper operation in the world. And just sort of reading from their CEO the turmoil that Trump's tariffs have thrown their business into,
Right.
both in terms of the US as a market and China as a market. Yeah, it must be a nightmare running any of those businesses right now. Anywho, what else have I got? News
You're going to talk about
wise,
tariffs, aren't you?
I was. Mr. Trump, President Trump's tariffs have been declared illegal for the second time by a federal court, a federal appeals court. This is in CNBC a few days ago. Federal appeals court ruled that most of President Donald Trump's global tariffs are illegal, striking a massive blow to the core of his aggressive trade policy. Friday's ruling is the Trump administration's second straight loss in the make or break case known as VOS Selections versus Trump. Trump attacked the appeals court as highly partisan and asserted that the Supreme Court, which isn't highly partisan, will rule in his favour. I added the last bit in there. So he's doing illegal tariffs because only Congress, as I understand it, has the ability to create tariffs, not the president. The executive can't do it willy-nilly.
Isn't that the crux of it? That the executive can do it in the cases of an emergency? But they're fighting over what the term emergency means.
I don't know. There's the US Court of Appeals for the Federal Circuit held in a 7-4 ruling that the law Trump invoked when he granted his most expansive tariffs, including his reciprocal, in quotes, tariffs, does not actually grant him the power to impose those tariffs. So there you go. Doesn't get into the justification of it.
Yeah, right.
Oh, yes. The Trump administration has argued that the IEEPA empowers the president to effectively impose country-specific tariffs at any level if he deems them necessary to address a national emergency. What's the national emergency? Trump
got elected?
I've been loving. So there's, I don't know if you've been following this, but there's the rumor mills online over the last week that he's actually dead or sick. Hasn't been seen in public. Wasn't tweeting or truth socialing. Wasn't giving random speeches at golf courses and stuff. So yes, the rumor mills are running wild about him at the moment.
I've seen the photographs of an enlarged hand and bruising on the ankles, etc. But I would think those photographs are very easy to fake. Who knows?
Oh no, the photos are real. The White House has come out and said that he's got some sort of. The White House has come out and confirmed that he's got some sort of medical condition that doctors are working on. Yeah.
Right.
But there's a lot of conspiracy theories around what the real condition is, and et cetera, et cetera. So we'll see. So, like the whole, if it goes to the Supreme Court and the Supreme Court concludes that the tariffs are illegal and he doesn't have the authority, I imagine he wouldn't have too much trouble getting Congress to approve them. It might tie them up for a while, but at the moment he controls both houses, so he should be able to get that push through. But
yeah, kind of surprising he hasn't done it already. I guess guess you could draft legislation to cater for the fact that the tariffs are fairly variable, but without going to Congress, he's not locking in amounts into law. He's got a lot of free room to change the rates all the time. So maybe that's why it hasn't gone through Congress yet.
And then, of course, the Shanghai Cooperation Organisation has been meeting the last few days. Putin with Xi and Modi, among others. Heads of governments representing nearly 50% of the world's population getting together and having a chat about what to do against America. It's fascinating.
It's more than fascinating. I think if Modi and Xi Jinping can form a legitimate alliance and set aside their differences, it's probably game over.
Yeah,
Really.
right. Fascinating just to watch it all play out in real time. These sorts of,
Yeah.
historical this landslide, in the negative sense of the word, from the US sliding down. Landslide normally, for some reason, why is a landslide got a positive connotation? Oh, they won in a landslide. Landslides are never a good thing, really.
No.
Your village gets wiped out if you're in a landslide. I don't
Mm.
know how that took on a positive connotation. But anyway, yes, which the US just sort of crumbling. I had one of my long-term listeners, a guy who runs a biopharmaceutical company out of Boston, Doug. Shout out to Doug. I don't think he listens to this, but he's got a facility in Brisbane that he comes out once a year to visit. They're doing cancer research. And the last time he was here was, I think, a year ago. So just in the run up to the election. And he was very confident that Kamala was going to win. And now he's just kind of like,
Yeah.
he said it's like just living in a nightmare over there. He's a Democrat, obviously, but yeah, he's like, it's just a ongoing train wreck, like living in the middle of a train wreck. Can't believe it. Anywho,
Yeah, as you said, for a long time, there's certainly starting to look like a big divide, if not a civil war, developing. I'm just judging that based on a lot of the things that David Markham posts on Facebook. He doesn't realise it, but a lot of it is pointing towards a civil war. The latest one I saw was the blue states refusing to collect taxes for the federal government and pass them on. So when things like that start to happen, it's not too far away from some kind of conflict, perhaps armed. Yep. Who knows?
On the bullshit filter last week, I started a new series on fascism, and it was something I've been threatening to do for 6 months. Going through the history of fascism and looking at the different variations of it in the 20th century, and then with the intent of moving on to looking at what's going on in the US today and asking the question, well, is it or isn't it? I mean, it's a word that gets bandied around a lot, but what is fascism? How do you define it? And as it turns out, it's incredibly difficult, really, because it took so many different forms, even in the early 20th century. But there are a number of scholars and historians have written books on it that I've been reading, and it's one of those things that if it walks like a duck and it quacks like a duck, then it probably has duck-like qualities.
Yeah, and it's probably perhaps the word fascism can be substituted by authoritarianism, which kind of removes it from just. I think when I hear fascism, I think of Hitler Germany, and of course that's not the only definition of fascism. It's been around a lot longer before that, and Trump probably won't look like the model that Hitler had in Germany. It doesn't mean he's not an authoritarian, and there aren't elements of fascism in what he does. But you could say that about other right-wing leaders in the past as well.
And left-wing. You have left-wing authoritarians and right-wing authoritarians, and fascism is particularly right-wing. I've always gone back to Trotsky, because Trotsky wrote a lot about fascism in the 30s and 40s, as a first-hand witness to it, examining it from a Marxist perspective. But he always said that fascism is what happens when the wealthy elite feel like their usual control mechanisms of the proletariat aren't working, and they need to crack down. So it's a far right crackdown on society to bring it back into alignment with their goals and objectives. So, yeah, And essentially, I was talking to Doug about this. Like, when you think about 20th century fascism, you think about Germany and Italy and Spain in particular. These were countries that had been through World War One, devastated, civil war. In Spain's case, they were
Mm.
economically very, very hampered. They were Germany
Yeah.
and Italy very late to the great colonialist expansion game of the 18th and 19th centuries because they didn't unify until late in the 19th century. So they missed out on getting access to the goods and resources, and they were feeling locked in and hampered by the other major colonial powers economically. And so the people were poor and desperate and ripe for someone to come along and say, hey, I can lead you to the promised land. The US, on the other hand, richest, most powerful country in human history, should be a land of milk and honey for everybody, doesn't really fit that archetype. So how, if
Well, it kind of.
fascism...
I'm sorry, I didn't mean to interrupt him.
Yeah, sorry.
Didn't mean to be fascist. No, I was going to say it kind of does, because whatever the reasons for it, it's often presaged by a breakdown in, well, people call it equality here or egalitarianism here, but I think it's more than that. I think it's once the majority of the population doesn't feel safe, doesn't feel like they're progressing, doesn't feel like they're comfortable, then things break down and it just becomes a numbers game then. Whoever can whip them into the greatest frenzy gets all the might. And whether that's because, as you said, historical reasons, or whether it's just like in the US's case right now that, their birth rate's declining, the life expectancy is declining, people can't get access to medicine, they can't afford education, don't get sued, you can't afford to defend yourself. All those kinds of things are just, breaking the social contract. I mean, I've always been amazed at how smart, your regular person is. I'll use a term I don't like, but your average person is. They understand what's going on. They also understand that they don't want to get involved. As long as I've got a job, as long as I can put food on the table, as long as my kids are okay, as long as my health's okay, as long as I'm, going to live a long, happy life, I don't really care what Bezos does in space or Elon does with drugs or how many kids he size or what Trump does in the White House. But that's breaking down now because it's classically it's like it's the reverse of what's happening in China. China doesn't really care. Chinese people don't really care whether it's the CCP in power or anybody else in power, as long as they're safe, they've got a job, they're happy,
life is
their
getting
family's
better.
not. Life is getting better, yeah.
Yeah.
But that's what's breaking down in the US. And that's
Yeah.
what I think is causing a swing to someone who can appeal to the masses and to look like they're giving legitimacy to their gripes.
But that's my point. Life should be getting better for everyone in the
Yeah,
US
it
because it's
should
been the
be.
land, they've been the
Absolutely.
global superpower for 70 years, untouched,
Absolutely. Yeah. It's just had too much capitalism, too much corporate power, the military industrial complex.
Indeed. All right. What do you got on your list of non-fascist talking points for this week, Tony?
Well, back with some happy news, Cam. It's actually been a reasonably good reporting season for QAV stocks. And first plane off the rank, first cab off the rank is Qantas. And I think I don't want to put words in your mouth, but I recall back when we added it to one of the portfolios, you said, it's already at $10. Is it really going to get any higher? So it's kind of at its high peak from before. Anyway, it looks like it has, or definitely has. And the profits seem to be bolstered, according to the Fin Review, by the arrival of more than a dozen next-generation aircraft, which has helped Qantas deliver record margins at Jetstar and led to a $2.39 billion profit at Qantas, well ahead of expectations, and the second highest in the airline's history. The full-year result, which included a special $150 million payment to shareholders, sent shares surging 9% and was a welcome change for Chief Executive Vanessa Hudson, who has faced questions about whether the airline's workplace culture has improved after several tough years. So, share price has gone up, good result. Bear in mind the backdrop. I think the result came quickly on the heels of a record fine for Qantas outsourcing its baggage handling division during COVID.
Mm.
The market's had a long time to digest that fine as it was pending and taken through the courts. Um, um, but you'd expect when the fine came down like that, the share price would go down. It didn't, and then the results came out and it went up, and it's pretty close to its record high. And it's also interesting that it's on the back of new planes. And I think I did the pulled pork on Qantas last year where I said it's all going to come down to how quickly they can refresh their fleet. And the new CEO seems to be going a long way to doing that efficiently and quickly and boosting margins by doing it.
Yeah, I hold Qantas in a number of portfolios, including my super. It's in some light portfolios. It's in the dummy portfolio. In one of the light portfolios, I bought it in September last year at $6.83, so it's up 70% since then. The other portfolios, November 24 at about $8.50, $9. It's up 35%. My super was one of those, November last year. It's up 30% in my super. Same time I put it in the DP. So yeah, it's done well. But it is one of those stocks that, you look at the chart and you think, ooh, it's looking like it's peaking. But, follow the system. Let the system be the smart guy in the room, not me.
Yeah. I was going to say, if charts made money, map makers would be king, but it's not the case.
Right.
So, yeah. Look, I agree. It's an airline. Warren Buffett famously said, if he had use of a time machine, he'd fly back to Kitty Hawk in 1903 and shoot Wilbur and Orville. So, he believes airlines are wealth destroyers. I have no doubt that Qantas one day again will turn bad, but we'll just let the process guide us on that one.
Yeah.
What else? Another one that's done well is Motorcycle Holdings, MTO.
Mm-hmm.
Again, a pulled pork that I did, and it's come out with good results. At the same time, I think it was the founder, but certainly the retiring CEO who stepped down sold a lot of shares, and that should have been a reason to sell off for the share price, but it hasn't. So last week, Motorcycle Holdings announced $650 million in record sales revenue and a 12.8% increase in earnings before interest, tax, depreciation and amortization. And net profit rose 27.7%, and the stock's gone up from there.
Yeah, it's been another nice one for us. I've had it in a light portfolio since December last year. It's up 96%. It's not bad for 10 months.
It's pretty good, isn't it?
I mean, it's not Zep.
Okay.
Zep, the
I'd
Chinese.
Be happy with 96%.
Zep, the listed in the New York Stock Exchange Chinese smartwatch stock that I covered on QAB America 5 or 6 weeks ago, is up 1,400% now since I covered it. You're welcome, Zep.
Yeah. So a couple of good results for us. Interesting chart that caught my eye over the weekend. The chart originates from Morningstar. I think I saw it in Alan Kohler's weekly report, but it's a chart of the number of US listed companies, which is a little bit over 4,000, and the number of US listed ETFs, which is now slightly more than the number of listed companies. What? So there are now more ETFs in the US tracking the companies than there are the companies underlying. I guess they also track commodities and currencies as well, but
right.
I think that's crazy. Yeah.
Isn't it? Oh my God. Why do you need that many ETFs? They're just like niche ETFs for, we only invest in companies that are run by people with one leg and one eye who go by the name of Bob. Like, if that's your thing, it's like porn. It's like ETF porn. There's a genre for everything,
right.
No matter how niche.
Right. Yeah.
There's it's like Rule 56.
What's that?
if no matter how extreme the niche is, there's porn built around it or something like that. Might be Rule 72. It's one of the rules.
Well, I think the reason is, again, going back to a Charlie quote, show me the incentives and I'll show you the result. So people are making money out of ETFs and they don't make money by starting one and that's it. They keep issuing new ones to attract more trade towards their fees. Purely
Yeah,
and simply what it is.
it's Rule
And,
34.
the bit of it, I think it's also a fallacy too, because as we know from watching it over the years, that the majority of actively managed funds don't beat the index, and that's pretty much a truism. It's been proven that many times, and that was what originally launched index funds, which became ETFs. I don't know when, 20, 30 years ago. I think Charles Schwab pioneered that business from memory. But it's just become perverse now because, that one key fact that actively traded managers underperform the index on average en masse has now morphed into ETFs being effectively actively managed because, like as you say, you can buy a gold ETF, you can buy a US dollar ETF, you can buy a value ETF or whatever. You're basically, doing the same thing as before. It's just it's an ETF and not a managed fund with a fund manager actively managing it. So a lot of those ETFs will also underperform the index.
Rule 34 is an internet meme which claims that some form of pornography exists concerning every possible topic. The phrase Rule 34 was coined from an August 13th, 2003 webcomic captioned Rule 34, there is porn of it, no exceptions. The comic was drawn by Tango Starry to depict his shock at seeing Calvin and Hobbes parody porn. Although the comic faded into obscurity, the caption instantly became popular on the internet. Since then, the phrase has been adapted into different syntactic versions and has been used as a verb. A list of rules of the internet created on the website 4chan includes Rule 34 with a list of similar tongue-in-cheek maxims. So I think we need one for an ETF now. There needs to be a rule for ETFs.
Well,
Yeah.
there's an ETF called SIN, SIN, which looks after invests in companies which are not scoring well on the ECG scale.
Yeah.
Maybe we could take it over.
Well, we just need a QAV ETF.
Yeah.
Yeah. All right. So what else you got?
What else have I got? I've got a pulled pork to do, which I can do now. Or we can do questions.
Let's do questions.
Yep.
I think Scott is the first one. Hi, Cam. Screenshot below is from CMC Markets for PRN, which does not stand for porn. Although it's fresh in my head now. Porn. Parenti, up until 15 minutes ago, whenever he sent me this, and before they released what looks like excellent results, the high bid price was about $2.32. Then it has gone nuts, as you can see below. I think the price had gone up to sort of $2.50 or something. It may be an obvious answer, but why would someone put a bid in at 7% or 17 cents higher than the highest offer price? So the screenshot that he sent me shows somebody had put in an order for 1,099 shares at a price of $2.50 when the shares were trading at $2.32. I think we've covered this before, but I couldn't remember the answer. Do you have a theory on this, Tony?
Oh, it's hard to say. It's a very small parcel of shares. So it could be fat fingers. They could have meant $2.30. Who knows? But my suspicion is that someone trying to manipulate the market price. And it's a hunch. That's all it is. I've got no overwhelming evidence for this, but I see it more and more these days is that there are low parcels traded, typically in the very late dying stages of the market before it closes, which will then set the closing price either a lot higher or a lot lower than what the stock was traded at beforehand. And again, my hunch is that's either someone trying to game the algorithmic traders who might look for share price movements to before they put an order in, or it's also an algorithmic trader who is either trying to manipulate the price or just buying small parcels of shares at a price above or below the current price and wants to make sure the order gets picked up. The other thing I did sort of tinker with is that the person who put it on at $2.50 may well have expected the market to react strongly to the results announcement and for it to roll through 250, and they wanted to get an order in that would be accepted. But why wouldn't it be 240? Same sort of outcome. I just
Yeah,
don't
right.
know.
Yeah.
Yeah, but a strange one.
I did ask GPT for its theories. It didn't really have anything either. Nothing that made sense. So, yeah, good question, Scott. Maybe one of our listeners out there will have another theory. Second question is from Dave. I have received 2 emails recently regarding joining class actions. One for BPT, Beach Energy, I bought as a QAV stock, and one for A2M, A2 Milk, I bought when I was playing the field before fully committing to QAV. Dave.
Yeah, monogamy's,
Hussy.
you got to stick with it.
You're an
Yeah.
investing hussy, Dave. Not expecting Tony to research either in detail or provide financial advice, but could he talk to any prior experience or knowledge he has? Seems a lay down misere to join and take whatever dollars may get won with no downside if they lose.
Yeah, well, I've certainly joined a couple of these in the past over the years. And, I feel like these class action lawsuits are really picking up the slack for what the ASX should be doing, because they generally, they're using the courts to prosecute the case that the company made or didn't make the appropriate announcements. And people were buying shares in a period when the company used something which they didn't disclose, but the shareholder purchasing didn't, and therefore the shareholder has lost money. I don't know the ins and outs of Beach or the other one that Dave was talking about, so I can't comment on those, and I'm not a party to those. Look, it's an imperfect way to get some kind of recompense, because the one or two where I have been paid out, take a long period of time that can, sort of drag on for 3 to 5 years through the courts, and while they prepare their cases and gather shareholders to the class action. It's getting better, but in the past you were receiving a lot less than the amount that was paid out, and the lawyers were taking a large stake of the pie. I guess that's fair because they're not charging you a fee, so they take the risk. But there has been some, I don't know if it's legislation or at least rules imposed by the court now, which limits, caps the amount that the lawyers can take on a fee for no service class action. So it's getting slightly better, but you won't, if you see a banner headline that this class action resulted in a $200 million payment, it can be a lot less than that goes to the shareholders who are in the class action, a lot going to the lawyers. It's had a bit of a distorting effect on companies because it means insurance, indemnity insurance has to go up for all companies really, because all of these court cases can result in a claim being made on their insurance to pay for the fact that the board thought it was doing the right thing, but it wasn't, and it's now been proved by the court that it wasn't, so the insurance can get paid out. So that's kind of seen dramatic rises in P&I insurance premiums over the years, which is a drag on business to some extent. So, it's not a perfect system, but if the ASX, again, did its job properly and nipped these things in the bud, there'd be a lot less of them. So, yes, Dave, in short, yes, I've signed up for them. Even with large shareholdings, the payouts can be minuscule compared to the shareholding, but you're still getting something back for the pain of having potentially and allegedly been misled by the company when you're buying their shares.
Yeah. I've got a late question that came in from Andrew. No prep on this one, but let's wing it. He says, Cam, haven't seen any chatter on WAF. West African Resources, WAF, picked some up when it was on the buy list in mid-2021 for 99 cents. I was a naughty boy and didn't sell it when it went south, but with gold booming, it has been having a tear. It's up over $3 at the moment, cash generating machine. That was until trading halt on Friday as the Burkina Faso government wanted 35% more of their latest mine. The company didn't update the market before open on Monday, so shares are now suspended. I was aware of the risk of West Africa and was getting a good discount to buy this. What to do now? Need to wait until there is an agreement between government and company, and then hopefully shares don't tank too drastically. I also hold PRU, thinking about selling while up 100% to reduce my exposure to West Africa. What does the great man TK think about this situation? He's spoken about country risk and West Africa in particular before. Would be good to hear his thoughts. Was it RRL that I got burnt by?
It was the one whose CEO was held by the government,
Yeah.
which I think was it, I'm not sure, Regal or Resolute?
Regis,
Regis, perhaps, yep.
maybe?
I own Perseus and I haven't sold any, so I can't comment on West African Resources because this is the first I've heard of the current issue in the trading halt. I've owned them in the past, I don't own them now. When we went through this before, when with the other gold miner in Africa, whether it was Regis or Regal or whoever, I said, well, I'm just going to apply the rules and see what happens. I did note today with Perseus that their results came out. I haven't had a chance to go through them. On the first blush, they don't look that great, but the share price hasn't dropped, so I'm not selling. I did see that Stock Doctor had removed them from their star stock status, so that may have an impact on them. But again, I'll just keep applying the rules that I apply. So I can't really give you much more than that. You can't do much now if the stock's been suspended. And if it comes up and it's gone down a lot, well, you've still made a lot of money. So, see what happens.
It's unlikely to go back to 99 cents. It might come down quite a bit. Yeah, I mean, I hold Perseus in a bunch of portfolios too. My super included, some light portfolios. It's up somewhere between 40 and 80%, depending on when I added it. So again, it has, even if it comes back a bit, we've got a lot of profit to take there.
Yeah, and again, this comes back to this musing I had a couple of weeks ago about whether if a stock gets to twice its sell price, whether we shouldn't take some profits. And West African Resource is right there at the moment. Its sell price is $1.51 and its share price before it was put into a hold is $3.04. And Perseus is fairly similar in terms of being double its sell price. So, maybe that's a trading rule that we need to investigate further. And maybe it's a rule where you sell some and not all, just as insurance. But when I did some research on it, it seemed like there were just as many cases where the share price kept going up as there were that the share price came down. So I couldn't really formulate a rule around it.
Yeah.
But hey, look, if you're worried about it, then sell some. You've made some money. You don't have to apply the rules slavishly if it's worrying you.
Yeah.
And there are other things to buy. So I'm not holding a gun to anyone's head saying, "Hey, come on, this is QAV, buddy." Total line.
Unlike the government of Burkina Faso, you're not holding a gun to their head. Yeah.
So that's all I can say really without knowing anything more about the circumstances.
I think Burkina Faso has been taking tips from President Trump. Yeah. Well, if you want to do business here, you got to give me 10% of the company.
Yeah, that's amazing, isn't it? I can't think of a government in the past which has done that in that kind of way. Australian governments, put equity into companies, and I think the latest example is the smelter in South Australia. But it generally does it to keep the thing going, so you can the staff can keep their jobs and the local area keeps its economy. And there's pitfalls with that as well, because that could just be burning taxpayers' money. But,
Hmm.
but for it to happen in the US in the way it has is very unusual.
Indeed. All right. There you go, Andrew. Good luck with that. Let us know how. I don't hold West African resources anymore. I sold it when it became a Rule 1. So I won't be keeping an eye on it, but keep us in the loop on that. Let us know how it plays out. I tell you, I did have to sell something, though, this week, Tony. I did have to sell EVO, Embark, Early Education. They became a 3-point sell this week. So
Is that the code?
EVO? Yeah.
Okay. What's the code for Evolution Mining then?
Don't know, but it's not EVO.
Oh, you are.
Embark Early
No,
Education.
you're right. It was Embark. Yeah. Okay. Yeah. Well, the childhood education sector is still cavitating after the problems with one of its staff members doing things they shouldn't do to children, which is really sad.
Yeah.
So I can see why you'd have to sell it.
Yeah. All right. You want to do your pulled pork? Who are you doing on the pulled pork this week, TK?
Well, a new stock on the buy list, which I was pleasantly surprised to see turn up this week, because we don't normally get fintechs or too many fintechs. This is Tyro Payments, TYR. I shouldn't say we don't get fintechs. We do. Pepper Money's still shooting the lights out and still on the top of our buy list. But yeah, well, I mean, originally these kinds of stocks were put in the growth basket, and this is another example of a stock that floated and has come down a long way from its initial public offering price and is now getting back towards value parameters. The new results are in Stock Doctor, so we can use the latest results, which is good to do our analysis. And I wanted to do it as well, even though it's not at the top of our buy list, but it has an ADT of $1.88 odd million. So it's a large ADT stock, which should suit our listeners to invest in if they're worried about liquidity. Who are they? Well, this is according to Stock Doctor. Tyro Payments is an Australian financial technology company specialising in merchant payment solutions, founded in 2003 and listed on the ASX in 2019. Tyro has grown into one of the largest non-bank merchant acquirers in Australia. The company provides EFTPOS terminals, integrated payment solutions and banking products tailored to small and medium-sized enterprises, particularly in the retail, hospitality and health sectors. Earnings are primarily driven by merchant transaction volumes, fees and interest income from banking services. While the structural trend toward electronic payment supports long-term demand, profitability has historically been constrained by high competition, investment required in technology and pricing pressures from larger incumbents. So that's a summary of Tyro. They claim on their website to have 76,000 merchants across Australia, so they're pretty widely entrenched. To go through their history, they were founded in 2003 by Paul Wood, Peter Haig and Andrew Rothwell. And interestingly enough, none of those people are around today on the register, or at least on the board, which is a bit unusual for this kind of company. Typically, you'll see it get a score for having an owner-founder. In 2005, Tyro processed its first live transaction. 2009, it was the first company to launch integrated EFTPOS Medicare rebates, which is why it's got a big footprint in the health sector. 2010 was the first to launch non-stop acquiring services. So that, if people aren't familiar with banks, they often use what's called OLTP computers. So they have complete mirroring. So if one computer goes down, that seamlessly transfers to the second one, which keeps things like EFTPOS machines, banking systems, ATMs all linked into the mainframes without falling over. 2016, they launched their first banking product, the Tyro Bank Account, and they were the first technology company to obtain a full Australian banking license and operate as an authorised deposit-taking institution. Not a mean feat too. That's a very hard thing to get with lots of regulations. And it also can constrain a company because the APRA, the financial regulator, requires the banks to hold a certain amount of Tier 1 capital. So you've always got capital sitting on your balance sheet that isn't being invested, or at least invested in anything but liquid, highly rated things like government bonds. In 2020, they were the largest IPO by market cap on the ASX in 2019. In 2021, Tyro became Bendigo Bank's exclusive merchant acquiring partner, and they also acquired a digital health payments business called Medipass Solutions. So that's the history of the company in a nutshell. Latest results were interesting, and I didn't think they were that good. So transaction volumes were largely flat. They were up 0.2%. Gross profit was up 4.4%, and operating costs were down 2.2%. So reasonably good news, but then going down further, NPAT was down 30%, so not great. They did have a couple of things to say about going forward in the results announcement, and the CEO said that active banking users grew 43%, with 1 in 3 new merchants now opening a Tyro bank account. So their foray into banking is getting traction. And in FY25, the CEO said that they built the foundations that will see us launch into new underserved industries where they can create a strong competitive advantage. The industries include pet insurance, aged care, unattended payments, and automotive sales and servicing. So they've traditionally been in retail, hospitality, and healthcare, and they're expanding into other markets now. And I guess the issue there is that they've been very good about linking their merchant acquiring FPOSs into host point of sale systems and back office systems like Xero. And there are lots of those on the market, particularly point of sale systems. They often get tailored for an industry. And I know that, when I was working in Shell, the automotive sales and servicing industry had its own special point of sale system, which looked at, parts markups and labor ratios and things like that. So this company's been very good at linking their FPOS into those kinds of point of sale systems and making the transactions and payments a seamless part of the point of sale system. However, shares fell as much as 12.5% on the day of the results announcement. That was back on August 13. And where are we? Shares of Australia's Tyro Payments gained as much as 12.8% to $1.21, hitting their highest since late February 2024. This was before the results announcement, I think. And that was because, and this is big news for the company, payments platform Tyro said that payments platform operator Tyro says it has received a takeover approach from multiple parties in recent months. The comments came after its shares gained more than 10% and were put into a halt by the ASX. The company does not disclose name of parties or offer price, and Stockopedia reported the stock was up 41.7% year to date. So it's been going up and down a lot. Something else, news-based, that drove the volatility was the fact that the CEO announced he was leaving. And to date, there's been no replacement announced. So Capital Brief said, Tyro CEO and Managing Director John Davey resigned on June 5, 2025 to take a new CEO role at a private equity-backed company outside the financial services sector. Davey will remain with Tyro for up to 6 months to ensure a smooth leadership transition while the company conducts an executive search for his successor. He joined Tyro in 2021 and was appointed CEO in September 2022. Tyro shares on that news were down 10.4%. So there's been a lot of volatility, and I guess it was summed up in a AFR article last week. The headline was, Takeover Target Tyro reports profits, but transactions are going nowhere. Weaker activity under a long-standing deal with Bendigo and Adelaide Bank has left total transactions processed by Tyro almost unchanged over the past year. The company is already facing investor ire after it belatedly confirmed that it had been approached by potential suitors this month. Tyro, whose chief executive John Davey is leaving the business, even though it has not announced a replacement, has refused to detail the takeover offers. I'll just get through the announcement. And Davey acknowledging the declining value of the Bendigo transaction, but downplayed its significance in the company's returns. From a contribution perspective, Bendigo is pretty small now, $4.2 billion out of the $43 billion total. So while it is something we are focused on, we think we are seeing some good traction with the Bendigo team, he said. Tim Piper, an analyst at UBS, said there were positive signs in Tyro's accounts, including improving transaction volumes in the third quarter of the year and underlying earnings roughly in line with the guidance. It's positive to see signs of a turning point in transaction volume, Piper said. Tyro was the largest float of 2019, surging to a $1.4 billion valuation. At the time, it was backed by Atlassian billionaire Mike Cannon-Brookes. Since then, the company's valuation has slid to $592 million. Shares fell another 5% after the profit announcement. Shareholders had been urging the board to finalise a takeover deal, even as the company described the unsolicited proposals as too cheap. Earlier this year, the Australian Financial Review's Street Talk column revealed American payments giant Stripe had initiated takeover talks with Tyro. That was in the AFR on August 26. So lots happening with this company, and I suspect the share price, even though it's gone down a couple of times on bad news, is up largely on the belief that it's a takeover target. And as we've seen before many times, when we see something on the buy list, we can see value in it. We're not alone, and it's often snapped up, or sometimes snapped up by a acquisitive larger company. Looking at the numbers, and I'm doing the analysis of the price of $1.25.5, which is 89% below consensus target, but way above IV1 of 19 cents and IV2 of 40 cents. The company has no dividend, so we can't score it for that. Stock Doctor financial health and trend is strong and recovering, so it gets a 2 for recovering, a 1 for strong. Stockopedia has a quality rank of 84, which isn't too bad, but I'd like to see it a bit higher. F-score is 5 out of 9, which is, again, good, but probably in the average range. Overall stock rank of 87, which isn't too bad. It does trade on a PE of 33 times, which is not the highest or the lowest, but certainly expensive. However, even though that's high, the prop cap it's trading on is only 4.77 times. So plenty of cash being generated by this company, but it's obviously spending a fair bit of that, and I would expect that that's going into technology development and perhaps acquisitions. Net equity per share is 43 cents, so we can't buy it for anywhere near book value. And that's 43 cents is higher than the net tangible assets, which reflects the fact that they've made acquisitions over the years. Earnings per share growth is forecast at 6%, so we can't give it a score for growth over PE, which is quite low. Doesn't have an owner-founder, and directors are only holding 1% of the stock, according to Stock Doctor, so found that a bit surprising. I didn't do enough research to know whether the founders perhaps, exited the company at the float or soon after, or when they exactly exited and for what reason. But often surprising to see the founders of the company not stick around. The company does possess consistently increasing equity, which is a good sign. Overall, the quality that I give this company is 60%. 9 out of 15, and the QAV score is 0.13, so it's just above our threshold cutoff of 0.1. Risks, there's a fair bit of, I'll say, industry pressure on this company, or it's a very competitive industry. Certainly the biggest risk is that the takeover that's been talked about doesn't progress. I expect to see the share price reduce if that happens. Another risk is the CEO replacement, and they'll find it hard to replace the CEO as well as while there is takeover speculation around this stock, because it could be a very short tenure for someone coming in. So if the takeover goes ahead, happy days. If it doesn't, then the share price will retreat and they've got to find a CEO. So a bit of pressure on them there. They face intense competition from not only the major banks in Australia, but other fintechs and also other global payments players, including Stripe. So it's a fairly competitive industry. Uh, what else can I say? The risks are that they do suffer outages, even though they do run these online transaction processing systems with duplication in them. They can still be they can still have outages for whatever reason aside from the mainframe, um, and that can risk reputation. And if you're a small coffee shop and your merchant terminal goes down too many times, you're going to probably change providers. There's a regulatory risk in this industry, and the first thing I thought of when I read saw Tyro on the boil list was what's going to happen with the RBA proposal to ban card payment surcharges, which comes in for July 2026. I would have thought that would affect their turnover, but they seem to be fairly sanguine about it. Perhaps it's because they expect that the card volumes will continue, but it's just the merchant's going to reduce their surcharge by 1% or 1.5%, whatever they pass on to customers for using credit cards, for example.
But that's
I
being,
couldn't find.
sorry, did you
Sorry.
say that's being banned? Credit card
Yeah.
surcharges? I hadn't heard
Yep.
that.
RBA bans them from the middle of next year, July 2026.
Wow.
Yeah. Big impacts on bank loyalty programs because that's generally their service fees are inflated and the margins used to offer those. And this came into effect in Europe, I think last year, certainly recently. And yeah, certainly loyalty programs over there took a hit and became less attractive to customers. So there's that dimension to it. But yeah, I mean, it should mean that people pay less for their cup of coffee by 1% or so when it comes in.
And everything, everything that you
And
pay for
everything.
on a
Yeah,
credit card, right? That's a lot. That's
correct.
going to,
Yeah.
wow. Interesting. And do you know
Yeah.
why, what the rationale is from the RBA?
Yeah, just for that very reason, it's an impediment on the economy.
Mm. Okay.
So I'll use the buzzword
And it's a
productivity.
rort. It's a rort.
Yeah, pretty much.
Yeah, right. All right.
Some of the other
Interesting.
risks this industry, the company has, this one in particular has a lot of small to medium enterprise merchants. As I said before, hospitality, medical practices, that kind of thing, hotels, and coffee shops, retail. And they are, they're the most vulnerable if there is an economic downturn. So as soon as the economy comes off the boil and transactions go down, it will hurt this company. Um, it's a continuous cycle of innovation, which they seem to handle, but it's got to be a risk that someone comes along with a much better way of doing things. Um, and I guess the last risk is potential data breaches, which have hit companies with transactions going across them, which could impact the trust that consumers have in this brand or that SMEs have in this brand. But it's not all downside. On the plus side, there's a takeover afoot, so generally takeover premiums are 30%. So some of that's already in the share price, but you may go up higher when the takeover is finalised, if it does get finalised. It is a positive for this company that it's diversifying into other merchant categories, so it continues to expand its base. And it does have a strong IT heritage and a strong R&D focus, so I think they're all positives for the company. But yeah, interesting that it's on the buy list, not the kind of company we not often see. Fintech or capital light type company, you could call it. Potentially, I'm not sure if that's the case, given all the merchant terminals they have out there. So maybe it's not a capital light company, but it's not your sort of industrial or bank or mining company that we often see, or airline that we see on the buy list every day.
Mm. And it's named after one of my favourite little towns in Queensland, Tyro, spelled
Really?
Tairo. You ever been to Tyro?
No, I can't say I have.
In between Gympie and Bundy. And there's a great little cafe there that we will often stop at and get a coffee when we're driving up to visit my mum. And the guy that owns the cafe owns not one, but two. What's the car from Back to the Future? The
DeLoreans.
DeLoreans. He owns 2
Yeah.
DeLoreans. He's a
Right.
DeLorean collector. There's often one of his DeLoreans parked out the front of his cafe, which is always fun to see.
I saw recently that Back to the Future was going to use a fridge as the time machine until someone
Originally.
pointed out that, yeah, that kids might climb into fridges and
Yes.
be attracted to it because of the movie.
Yeah.
Mm.
Yeah. Oh, good. Thank you for that, Tony. It is interesting to see a company like that on our buy list. We don't see many
Mm.
sort of tech companies like that
Mm.
with the numbers that work for us. Speaking of numbers that don't work for us, Bank of Queensland, I noticed while you were talking, had become a 3-point sell, and I own them in a number of portfolios, including my super. But they've edged back up. They're now sitting on their sell line, $7.05. They were down to 7.03. They've edged back up to 7.05. I did have a
How
look.
far away are they from a dividend as well? That's the other thing to be careful of these days.
There's nothing in Stock Doctor. I checked that. I think their last one was May, so probably another one in a couple of months. I think their annual report is due out in September.
Yeah. So are they a March, September reporter, as often the banks are?
Yes, I believe so.
Right. Okay.
Hold on. They're scheduled to release their financial results on the 15th of October, so there'll probably be a dividend after that.
Yeah.
But they did come out with an announcement, a strategy and trading update on the 28th of August, which is what seems to have caused an 8 or 9% slide in their share price.
I won't do that again. Good on them, though, for continuous governance.
Yes. Your wife isn't on the board of BOQ any longer, is she? She's
no. She still has some shares, so I'll talk to her about whether it's time to sell them or not.
Says the Bank of Queensland has previously indicated its intent to optimise balance sheet efficiency and grow capital-light revenue streams to improve return on equity. Recently, this has involved recycling capital from lower returning home lending into business lending. BOQ is exploring a whole of loan sale process for up to $3.8 billion of its equipment finance portfolio. This proposed transaction is aimed at enhancing capital flexibility, improving ROE, and supporting scalar customer growth through an off-balance sheet forward flow origination and servicing arrangement. Wow.
Well, the bank jargon there, isn't there?
Yeah.
As I did see that, and as one of the analysts said, it's a bank outsourcing a bank. What's the point? Yeah.
So it's trying to sell its equipment finance portfolio to someone else, basically.
Well, the financing for it looks like they'll keep the customer relationships and clip the ticket, but someone else is going to be the bank and provide the actual capital that's lent out. And I kind of sympathise with it because they're saying, well, we can get, better income if we lend that money to banks rather than lending it to people to lease cars or tractors or whatever they're using it for. Yeah, but that wasn't received as good news by the market.
Although their projections for the full term, the full year results, that cash earnings will be up 9 to 12% versus FY24, cash ROE up 50 to 70 basis points versus FY24. There's a few one-off adjustments, branch strategy costs, restructuring costs, and they're withdrawing some of their ROE and cost-to-income targets due to ongoing uncertainty and industry headwinds. But there you go. So keep an eye on that. I
think just if I can butt in too, I think again with the regulator, there has been, I don't know where it's gone to, but there was a kite flown during the productivity summit that the regional banks should have some of their capital constraints less lightened. So at the moment, I think we spoke about this when I did a pulled pork on Bank of Queensland. Regional banks, because they aren't as big as the major banks, have to hold more of their capital as this tier one capital concept I spoke about before requires, and they have to hold more than the major banks do, which means that their margins are constrained when they have to compete against the major banks to issue mortgages, which hits their bottom line. And it's It's good from a regulatory point of view because it's, if there is ever a bank that goes broke, it's going to be a small one before it's a big one, I would have thought. That's conventional wisdom anyway. But it's bad from a competitive point of view because the small, nimble player never gets to compete on a level playing field with the larger player. So if that comes to pass, I would have thought there'd be a re-rating in shares of companies like Bank of Queensland.
Right.
Very much a watch this space, though.
Right. Okay. Well, thank you, TK. That's all that I have. After hours. What do you got?
Well, while we were away, I think it was Netflix released Leon the Professional again,
I saw
and
that.
it
Yeah.
rocketed up to the list in terms of the most watched movies, and we watched it. I introduced it to Ruddy and Wall when we were up playing golf in Yarrawonga one night, and just loved it again. Always have loved it, but just holds up so well.
Yeah.
Got you know, sort of uncomfortable scenes with a very young Natalie Portman
Yeah.
and Jean Reno forming a
Yeah.
relationship.
Yeah.
Nothing ever happens on that side of things, and Jean Reno's very careful about it. But yeah, it's a
Yeah.
strange relationship. But just
Yeah.
I love Luc Besson. I love Gary Oldman. He's one of his best roles
Yeah.
as the as the head of the DEA in whatever town
Yeah.
they're in, New York. It's fantastic.
That period was like peak Gary Oldman in the early to
It
mid
was.
90s. The Fifth Element, that True Romance, where he was just pulling out his most drug-addled, wild, fierce characters. They were always great.
Yeah, really enjoyed it. And then the other one I watched during the week was the documentary on Devo, which was fantastic as well.
Right. I haven't seen that one yet.
Yeah, yeah, it's just out in the last week or so. It's really good. Always been a Devo fan. Saw them when they first toured Australia back in the late 70s, early 80s. Were great to see live. Always been kind of very iconoclastic. But the documentary goes right back into the philosophy behind Devo. There were song titles which you sort of looked at and scratched your head, but they actually have meaning from various books they've read. And the really surprising thing for me was that uh, Mothersbaugh and Casals were students at Kent State during the Kent State massacre and the riots.
Oh, really? Wow.
That really shook their world and sent them down this, rabbit hole of what's wrong with America and de-evolution and all these kinds of things, which they took a long time to turn into sort of pop music, and went through lots of iterations and would do things like go and play in bars where they just play, really out there, atonal music and almost confront the crowd and then get booed and off the stage and get into fights and all this kind of stuff. And then up to the time when they had Uncontrollable Urge, I think was their first big single, and started to play in CBGBs with the Ramones and bands like that. And they were just surprised that, Jack Nicholson was in the crowd and John Lennon was in the crowd, and they just became sort of flavour of the month as the new thing that came along, and then sort of went on from there, always fighting with their record company, changing record companies, sort of balancing the record company's demand for a top 10 single with stuff that they wanted to do, and continuously toured, continuously experimented with their videos. It was funny because I think it was their second record came out, the record company wanted to put cutouts of Devo in all the stores, and they said, wait a minute. What's that costing? And they said $10,000. And they said, can we take that and make a video? And the record company said, okay, because music videos weren't done then, and they made one of their videos, which happened to coincide with the launch of MTV. So Devo got high rotation, and then sort of 6 months later, when the rest of the music industry caught up with it, they couldn't get played on MTV anymore until I think it was Whippet came along. So yeah,
Right.
just really interesting clash of this idea of we're going through a de-evolutionary cycle with commercial hits and touring, and really interesting documentary.
No, I'll have to check it out. I mean, I've never really gone deep into Defo. I mean, I've listen to them from time to time, but I've never really gone deep. And I should. They're part of that, like the CBGB sort of culture that I like all the artists that were big in there. That's my jam, those guys. Do they explain the flower pots on their heads?
Oh, they probably do, but I've forgotten. Yeah, all these things get explained. Like they're either on the back of a comic book or they're in a book that, like a underground manifesto that someone read. Yeah, but like I can't tell you the reason. And then they had the plastic Ronald Reagan haircuts they used to wear as well on their heads, the sort of swept back side part, black hair, until they got sick of telling people it's Ronald Reagan, it's not JFK. Yeah.
No, very good. I don't have much to report. Nothing really jumps out at me this week, although I have been sort of obsessed with Shostakovich's Leningrad Symphony a lot this week. Been listening to that on repeat, different recordings of it. Started listening to an audio book about it and the circumstances under which it was composed and performed. It was during the siege of Leningrad, which was his hometown. And they were performing it. I think it was like a year. Like the siege went for 872 days. It was like millions of, Soviet civilians died, and it was cannibalism and all that kind of stuff. They were talking about the orchestra. The Leningrad Symphony had been shipped out. They'd gotten out, as had Shostakovich a month or so into the siege. They weren't there, so a conductor who was going to put it on had to find musicians, and they were pulling in musicians from the front line. Just anyone with any musical ability was being pulled in, even women that hadn't played in classical music. They were like jazz musicians or whatever. If you can play an instrument, you get hauled in. And they were all like starving. They were stick thin because there was this famine. The city had been under siege for like a year, I think, at this time. If they turned up late for a rehearsal, they didn't get their food ration card for the day. And one guy, he had to bury his wife who had died of starvation that morning, and then he was late for rehearsal, and the conductor wouldn't give him his food ration card. But the most interesting part of the story was the Germans were shelling the hell out of Leningrad, and so to provide some quiet for the performance so the audience could hear the premiere performance, there was this one particular artillery commander on the Russian side that bombed the crap out of the Nazi positions an hour before the performance, just to make sure they wouldn't be able to do anything for that. Well, it was like an hour and a half the symphony goes for. So they could buy an hour and a half of quiet time so the people could actually hear this thing performed. As it turns out, the performance was terrible because the musicians were all dying of famine, and most of them weren't classically trained, so it wasn't a great performance. But there's a lot of first-hand testimony in this book. People were saying that the oi polloi of Leningrad that were left went dressed in their best clothes to this thing, all stick thin because of the famine. And for most of them, many of them anyway, it was the last time they ever got to put on their good clothes because they died. That was the last thing they got to do, was go to the premiere of the Leningrad Symphony. But I watched a documentary on YouTube about it, and the guy was saying there's probably never been a piece of music composed and performed under these circumstances. It was the conductor, like the greatest conductor of the 20th century by many estimations, writing a piece about the defense of his home city while it was under siege by the Nazis, performed while it was under siege by the Nazis, celebrated around the world at the time. On YouTube, there's a recording of the performance of it on NBC by the NBC Symphony Orchestra. NBC had their own symphony orchestra apparently in 1942, when it finally got smuggled out of Russia on microfilm and was conducted by Toscanini. No, not this one wasn't conducted by Toscanini, but he conducted the first performance of it in the US. But yeah, just listening to the preamble, the on NBC of them explaining the importance of this, like it was a symphony written about standing up to the Nazis. And it was anyway, it's a great piece of music. You know, I love my Shostakovich, so it's kind of I've been obsessed with that for the last week. That's about it. All I have to report. But if people haven't heard that, go and listen to Shostakovich's Seventh Symphony. Just even if it's just the first, go listen to the first 5 minutes of it. You don't need to listen to the whole 90 minutes. But even the first 5 minutes it's a pretty amazing opening to it. Very defiant opening to it. Well, that's it. That and fascism has been my week, Tony. Fittingly.
Leningrad and fascism.
Yeah. Well, let's go and talk about who did I say it was? SUV.
Brazilian Timber Company.
SUZ. Yes. Brazilian eucalyptus farming / paper. And we'll talk about why eucalyptus is being grown in Brazil. Always fascinates me when I go to the US. And I remember going to Nicaragua years ago for a cigar thing, and just eucalyptus trees everywhere as we were driving down the road. It's very weird to see eucalyptus trees outside of Australia. Anyway.
Had the same feeling in San Fran when I was there once.
Yeah. Lining the streets in San Diego too. The eucalyptus trees everywhere. I remember the last time we were in San Diego. Very, very weird. Okay. Thanks, TK.
All right.
Have a good week,
Happy
everyone.
ASX.